Hey, what's going on, Bull Runners? Welcome back to the channel. Ryan Huggins here, aka Win with Ryan. Everybody that I've talked to in the last couple of days are in absolute panic mode. They're talking about waking up tomorrow and seeing XRP down another 25%, around the $1.50 range. Unfortunately, that's not some random scary story either, because a fresh technical breakdown and 4 straight months of falling network usage are flashing red lights everywhere right now. But here's the thing. If you know exactly why it's happening and where the real support sits, then you won't be one to panic sell at the bottom. Today, I'm going to be breaking it all down, plus the huge DeFi regulation news that just dropped in Washington that you need to know about. We're going to be going over that as well, so you can decide what to do before this weekend hits. We're going to head over to X, find out all the breaking news that's happening in the financial world today. We're going to look at 3 reasons why XRP is at risk of that 25% drop, but will it happen? And the new prospective CFTC chairman addresses this DeFi regulation situation. And we're going to stop over at Altcoin Pro University and take a look at our full market breakdown from our top analyst, Curious Jay. But most importantly, we're going to see if there's any optimism to see in the charts as well. We're going to be looking at key levels of support and resistance for XRP, plus the long-term and short-term momentum waves, and so much more in today's video. So if you're like most people where you don't have the opportunity to spend hours a day doing crypto research, well, you found the right channel. Go ahead and subscribe right now. That's what we do every day. And if you are still feeling bullish about this current bull run, let us know by commenting 777 down below. So on some X news that have just been breaking here, NVIDIA, this is huge. This is very powerful for the traditional finance. And this is also a big reason why in the last couple of hours, we have seen the crypto market respond very positively. As we know, the markets have been bleeding down, but this was a huge report for NVIDIA. They reported a $57 billion revenue this afternoon for their new earnings report, which is extremely higher than their expectation. Also, some interesting news. Just in, BlackRock files a new staked Ethereum trust in Delaware. And to go along with that BlackRock news, it's been a big day. The UAE State Fund, that's right, the country, UAE, their whole entire fund for the country, triples its stake inside of BlackRock's Bitcoin ETF. Now, as you know, we have seen continued outflows for the Bitcoin and Ethereum ETFs. As we have a look here, the last 4 weeks have been to the downside, minus 799 million, then 1.2 billion, then 1.138 billion, and then already this week, 573 million. But some good news, today's inflows was positive of $53 million. So what we really want to see is some massive flows of volume coming back into those ETFs as well. Now, when it comes to Bitcoin, well, there is a little bit of negative news as far as charting goes. Bitcoin's weekly super trend, that's an amazing indicator that you can use on all different time frames on TradingView, but it did just officially turn bearish, confirmed by the close below the 50-week moving average. This combo preceded a 77 to 84% drawdowns in prior cycles as sentiment hits extreme fear as well. So as we take a look back in 2018, the super trend cycle indicator, which actually triggered here, they're giving us an extra large gap. So it's kind of incorrect as far as this 83% drop, because the top to here, this is where it officially switched on as far as the super trend goes. You can see that the green super trend support line right here was officially broken, and then it continued down from there. And then we head over here, the super trend signal also flashing here when it broke below the 50-week exponential moving average, and it did continue down. And as we see right now, officially today, after the breakdown, which happened yesterday, will we have a second consecutive week to the downside, confirming this close to the downside? This right now, sell signal is active, but it can be reversed by flipping back to the upside. We can see here as well when we were rallying up green, flashing back to red, which did have an extreme drop all the way down below 4,000 and then rising back up, running green, flashed red, and then immediately flashed back green and then flashed back red again. So this confirmation is a very big deal, but it can recover itself rather quickly. We'll take a look at that in the charts here shortly. Major news coming out, job openings have decreased by 32% since ChatGPT's debut. So the fears of AI taking people's jobs it is real. Like a lot of people are trying to cover it up and act like it's not happening and so on and so forth. But job openings have decreased indeed. Entry level roles in AI exposed industries such as software, customer service, data entry have sharply declined. Younger workers 22 to 25 are bearing the brunt. So those younger workers were already upset about so many things, understandably, because the economy is crazy for the younger generation. Well, now they are even more upset. Breaking U.S. consumer sentiment sinks to 50.3 in October, second lowest on record and below financial crisis and prior recession lows. By the way, I am sorry to kick off this video with so much negative news, but you're a genius for being here because you're involved in crypto early, but you also have to be in reality. I'm not going to sit here and tell you XRP is going to $1,000 by January. There's a lot of channels out there that you can go watch and do that, but we bring the real information for you, both positive and negative. US Debt Clock also comes out with an interesting post today talking about the economy, the scam economy, which was the federal banking cartel running and controlling everything, which was private money laundering syndicate that you were not part of, but they always charge you with the IRS. Well, the solution to this is the United States Treasury Sovereign Wealth Reserve, 100% reserve, unalienable asset trust. Will we be seeing the solution shortly? And also the 50 state credit union banks. What if you could borrow money from a bank instead of at 28% at some places, from 0 to 3%, your home mortgage, your car loan, your business loan, your credit card loan from 0 to 3%? I think that a lot more people would be taking risks as far as opening businesses. 80% interest savings. Obviously pie in the sky, but it is fun to watch the US debt clock because a lot of the things they talk about would be revolutionary to the United States. Will any of those things ever happen? Now, on some positive news, the market is bleeding, as we know, but how about the miners? Well, the last 7 days show net accumulation of 777 Bitcoin. This transition from distribution, meaning they were selling a bunch of their crypto back towards accumulation at relative low prices, historically precedes stabilization phase. So do we potentially find ourselves in a bottom scenario for the short term? We're going to take a look at that when we get into the charts here shortly. Also, it'll be interesting to see how this affects the economy, but this is just breaking literally within the few minutes of starting to record and get ready for this video. But President Trump, we're going to do some political news here. He has just officially signed the release of the Epstein files and how it's already backfiring on the Democrats. Let's take a look. Jeffrey Epstein, who was charged by the Justice Department, Trump's Justice Department in 2019, not the Democrats, was a lifelong Democrat, donated thousands of dollars to Democratic politicians, and was deeply associated with many well-known Democrat figures such as Bill Clinton, who traveled on his plane 26 times, Larry Summers, who just resigned from many boards, including Harvard, sleazebag political activist Reid Hoffman, Minority Leader Hakeem Jeffries, who asked Epstein to donate to his campaign after Epstein was charged, Democrat Congresswoman Stacey Plaskett, and many more. Perhaps the truth about the Democrats and their associations with Jeffrey Epstein will soon be revealed, because I have just signed the bill to release the Epstein files. As everyone knows, I asked Speaker of House Mike Johnson and Senate Majority Leader John Thune to pass this bill in the House and Senate respectively. Because of this request, the votes were almost unanimous in favor of the passage. At my discretion, the Department of Justice has already turned over close to 50,000 pages of documents to Congress. Don't forget the Biden. So we're going to see this could be an upheaval of the markets over the next couple of days. Obviously, these papers, the files won't be released for 30 days, so we should be safe for most of the rest of November, getting into early December. So is this going to be a Christmas present, or is Scrooge going to give us a bah humbug on the economy with this launching? So let's jump over here to take a look at why XRP could be at $1.55. And are you buying at those lows? XRP has now got a triangle pattern, a descending triangle to be specific, characterized by the flat support level and a downward sloping resistance line. Resolves when the price breaks below that flat support and falls by as much as the triangle's height. So as we can see right here, this blue line is currently acting as our resistance line. Price hit it, came back down, bounced off this $2.20. moved itself back up, bounced off of this level here at $2.60, came back to support level at 220 again, ran back up, could not break this resistance line at 250. And unfortunately, now we have broken below this $2.20 level. If this pattern were to play out, the target to the downside would be a 24% move to the downside, giving us a $1.55 target price. As I said, this is going to be a little bit of negative news, but you need to hear it just in case. But we're going to show some positive news when we get over into the charts. Also, Glassnode distribution heat map shows a large cluster of supply sits above us at $2.38 and $2.40, which is also coming into contact with the 100-day simple moving average triangle resistance line, where nearly 3.23 billion XRP were acquired. This will mark an area of stiff resistance for XRP, but if it does rally to that level and break through, we're looking very positive. On top of that, below this chart here, it does show that the XRP charts have a very nice rising channel that could play both up and down, more like a giant bull flag, which we were all thinking was going to break out to the upside. However, the one thing that a lot of people missed was the fact that when you look at the RSI, it actually flashed on this weekly chart here a bearish divergence, and we have been going down ever since. You may be asking, well, what is a divergence? Well, a divergence is when price continues to make higher highs. This high came down and found itself some support, made a run up again, made a new higher high, while on the RSI, this did make a new high along with this one here, but obviously we can see it started to taper off. This is the momentum. RSI is a momentum-based oscillator. Price was peaking at higher levels while momentum was actually falling to the downside. On top of all that, there was declining XRP Ledger network activity. On-chain data from Glassnode reveals that on-network activity is now far below its high of 577,000, which was recorded back on June 14th. And now, only about 44,000 daily active addresses. At the time of writing this article, users' transactions have declined significantly, possibly signaling reduced interest or lack of confidence in XRP's near-term lookout. New addresses coming on board of the XRPL have also dropped to a current level of only 4,000 from 13,500 back on November 10th. But this also does go along with the whole market, as the total market fear and greed index is at 15 right now. It is currently sitting in extreme fears, has not been this low since all the way back on April 7th, 2025. And this report does do a phenomenal job laying it all out there for the bearish case. However, we are getting to a point where people have capitulated. There's not much downside left to go. There's no retail investors coming in at all, whether it's for Bitcoin, Ethereum, XRP, none of it. Something spectacular needs to happen to make something push to the upside. And one thing to keep in mind is that our short-term and mid-term momentums have fully reset to zero. So the cycle from 0 to 100 has been reset, and there is potential that we could rally to the upside. And can the launch of the ETFs this week and next week be the catalyst that starts that fire?
What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a 100K funded account with zero of my own money on the line. I just paid a one-time evaluation fee to take a trading test. That's it. Because everyone's been asking us, how do I get crypto loans? Or how do you leverage trade without risking any of your own capital? Well, that's exactly why we're leveraging Breakout, which is a crypto prop trading firm recently acquired by Kraken with over 10 million clients, 2.5 million funded accounts, and over $1.5 billion in revenue in 2024 alone. They will fund you up to $200,000 after passing one simple trading test. And you get to keep up to 90% of the profit, and you can withdraw in USDC 24/7 after passing the trading test through the link in the description of this video. Now, here's the problem that I've seen most people face. Let's say you're trading with $10,000 of your own money. That's your rent. That's your groceries. That's an emergency fund. And one bad trade or black swan event and poof, your account is completely blown. Rent's late, savings is wiped, and your family is stressed out. So you're not trading to win. Trading your own money is trading for survival. Whereas trading with 100K of risk-free capital is freedom. In fact, if you only have $10,000, you should never be trading with all of that. Instead, if you took just 10%, which is $1,000, and you buy the 100K or the 200K breakout test, and you pass the test, well, you're going to be trading with six figures without depositing or risking any of your own money. This is what I'm doing right now. And if you fail the test, you only lose $1,000 instead of your $10,000 because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple $1,000 trading test. And the best part is there's no limit on retries. So that $1,000 can give you 10 shots at a 100K account if you fail the first few. That's 10x better risk management. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. That's OPM, other people's money. You pass the test, you trade Kraken's money, and you get to keep up to 90% of the profits. And you can withdraw USDC on demand 24/7. So I paid, I passed, and now I'm trading 100K, and it only cost me $1,000 rather than risking $100,000 of my own money. And now it's your turn. So do not buy the small test. You're here to scale your portfolio fast. So here's exactly what you need to do right now. I left a link in the description of this video, and when you click it and select the classic one-step 100K or 200K account test, you simply click start trading, and then you enter in the affiliate code 777 on your checkout to get the maximum discount on your 100K or 200K funded account. And make sure to check the add-on box for the 90% profit split. It's only $100 extra. It pays for itself in your first payout. And if you skip it, you're leaving 10% on the table forever. So it's well worth it. Then you simply pay for the test, you pass it, you have an unlimited time frame, and you get to keep up to 90% of the profits. And again, you can withdraw in USDC anytime that you want after you pass the test. That's it. Now, we do earn a small commission when you use our code 777, but it supports value-based videos like this, and it'll help you get the maximum discount on your 100K or 200K funded account test. So click the link in the description right now, take the test, and let's get you funded.
Michael Seelig, the prospective CFTC chair, addresses the DeFi regulation at his nomination hearing. During his opening statement at his nomination hearing, Seelig said, "We're at a unique moment in the history of our financial markets. A wide range of new technologies, products, and platforms are emerging. The digital asset economy alone has grown from a mere curiosity to a new $4 trillion market." During that hearing, he was asked about decentralized finance, and he responded by saying, "When we're thinking about DeFi, it's something of a buzzword, but really, we should be looking to on-chain markets and on-chain applications and thinking about the futures of these applications, as well as where there's an actual intermediary involved." The Democrats are having concerns about his potential leadership. Amy Klobuchar, the Democratic ranking member of the Agriculture Committee, pressed Seelig and other lawmakers on the leadership at the CFTC. Since September, acting chair Caroline Pham has been the sole commissioner at the agency, which usually has 5 members. Pham is expected to resign should the Senate confirm Seelig. Heading over to CoinMarketCap, let's take a look at the current state of the market. Bitcoin closed below the 50-week moving average for the first time this cycle. A second close below confirms the short-term bear trend. Bitcoin dominance is rolling over, which sets the stage for potential altcoin rotation. So all of you out there that have been waiting for altcoin season to finally come, when we look at the altcoin season index, it's 26 out of 100. It's been trading in this essential same range here. Now, obviously, the price has continued going down. That's altcoin market cap. But the sentiment of altcoin season trading sideways. And when we take a look here at Bitcoin dominance, currently sitting at 58.7 and has been coming down over the last couple of weeks. October was bearish. November has been even worse, which is not normally seasonality. $100 billion evaporated from crypto just since Friday, but stocks and gold are going up. So this is an isolated crypto flush driven by leverage and liquidations. Macro liquidity conditions are preparing for a major shift, and that matters more than anything. Now, a lot of people are asking, is the top in? Like, is it over? And that's why people are panicking, as I talked about in the intro. If this was the top, it's a very atypical, and correction will reflect that. Normally, we see euphoria at the tops. We didn't get that. We didn't get any sort of altcoin season. Bitcoin did run up to new all-time highs, but most altcoins did not follow behind it. Normally, we see massive retail involvement. We saw literally none. People don't care. Either they're priced out or they're over crypto. They don't even care about it anymore, which is not a good sign. We need to see that come back. And normally we see altcoins explode before a cycle peak. We didn't see any of that. Why altcoin strength can be misleading. Don't assume that alts that held up during the drop will continue doing so if Bitcoin remains weak. So those of you guys out there holding a bag of a bunch of crazy altcoins, watching Bitcoin fall, thinking, oh, I found the right coins, I'm winning. Be very careful out there. Pay very close attention. They will eventually follow. Still, it is valuable to observe which names are holding relative strength because they tend to lead once the market turns. And that's why it is great to see how well XRP has withstood this extreme downside over the last couple of weeks. We do see right here another major support going to be potentially coming into play, that $1.90 range. We'll see if it's even going to reach that level. But when you take a look at Bitcoin, this was a massive sell-off just these last couple of weeks. Zcash has been a standout. It has real strength, but the concern is that the whales may be behind the move, and I'm not interested in becoming exit liquidity. If the top is not in, Zcash can move much higher, but I'm approaching this with caution. The 4-year cycle narrative is breaking apart. There's a long-held belief that 2026 will be the next down year. Because so many expect that, many people are front-running it by selling right now in 2025. The front-running pressure is what is causing the 2025 to be choppy. Once 2025 becomes a weak year, 2026 no longer is expected to be a down year. So the silver lining, liquidity must return, and it will. We're at the end of the tightening phase. Quantitative tightening has been going on for quite some time. Inflation has been cooling off, and the system is showing real stress. Looking for a positive outlook, a bull case scenario here, Bitcoin needs to reclaim and hold above that $100,000 mark, closes above the 50-week moving average, volume increases, and the RSI starts trending upward. Macro conditions begin easing, which boosts liquidity. Altcoins start showing strong leadership as dominance continues falling. So let's take a look at our favorite altcoin, and that is XRP. We're looking at this on the weekly schedule. Unfortunately, we did break below the 50 exponential moving average, and now we have no support on the weekly charts based upon the moving averages that I use frequently. So we're going to go ahead and take it one next step to the monthly chart and take a look at what could potentially be going on. We have now broken below the 10 exponential moving average on the monthly chart. There is a very, very large fair value gap here that has yet to been filled. We do see that last month, that crazy liquidation that came into our supply and demand zone, it did actually wipe out more than 50% of the fair value gap, so it does not need to close that now. We do have 10 days, 22 hours left in this monthly candle, so there is a possibility of that challenge back to the upside, filling in this fair value gap, a bullish fair value gap, which has not been filled, which would get us all the way back to 265. Conversely, if we do continue breaking down, our next gap for support is all the way down here at $1.64, and that's the 30 exponential moving average. Our short-term momentum wave has flipped from green to red on the monthly chart, and it is not close to cycling out to zero. However, the 25 level is here. There's a potential after this month candle closes. If it's not too deep and it doesn't continue its drop here, we could see a rebound off of the 25 level. Looking at the weekly, the long-term momentum has flashed red for the first time since all the way back in October 28th, 2024, which was actually right before the rush of November. Obviously, that's not happening exactly the same way this time around, but there is reality that this could immediately rebound on some positive news. Really, the news is just to bring volume. We need volume coming back into XRP. Taking a look at our 3-day chart, we've been bearish now for quite some time, all the way back since October 7th on our Wolfpack indicator 3-day chart. Our short-term momentum has bottomed out and tried to get back up, unfortunately failed, and we are riding both the bottom on midterm and short-term momentum. So as you know, weeklies both bottomed, midterm, short-term. 3 days bottomed, midterm, short-term. And taking a look at the daily, in the next 48 to 72 hours, it will also be back to zeroed out on the bottom of our shaft trend cycle. Long-term momentum on the daily here, unfortunately, is showing bearish still. and it's a long ways away from recovering back to bullish. Our exponential moving average, the 10, the 30, and the 50, all sloping down hard, showing bearish signals here as well. Let's go ahead and flash over to our weekly spider lines chart for XRP. Our weekly spider line has broken our $2.25 level, and it has been retested multiple times, but unfortunately failed. The next spider line to the downside that we would have on this level is $1.90. So keep in mind $1.90 as a potential support. It does not have to bleed all the way to that level, but that is a potential support. When we take a look at our 12-hour charts here, though, we can see our 1100 exponential moving average has finally hit. Now, we've been talking about this for a week and a half now of this price coming back down and actually getting to this level. This could be a fantastic rebound spot here. 12-hour chart we're looking at. Short-term, mid-term momentum bottomed out, ready to make a rise. We also take a look here at Bitcoin. Bitcoin hit it earlier, so Bitcoin also riding exactly onto its 12-hour 1100 exponential moving average, holding as support right now. Short-term momentum on Bitcoin has flipped back bullish. Now, long-term momentum, though, it's a long ways away to clearing back above zero, but this is a very beautiful start for us. We're getting a little momentum to the upside. If we lose that and we fail, we could see a continued drop, and we see this here, supply and demand zones. Our red line actually coincides with our daily 1100 exponential moving average. If price were to come and meet this level in the $75,000 range, could be doing it in December. That's if we continue this downward bleed. If we take a look at Ethereum, it is also at its 12-hour 1100 exponential moving average. Short-term momentum has popped back to the upside. This is positive on the 12-hour. If we can get the midterm momentum, so we need 12-hour candles, okay? There's 9 hours, 34 minutes. We need 5 consecutive 12-hour candles to the upside. That would also break us here, bring short-term momentum up, and I believe our long-term momentum would gather as well.
What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a 100K funded account with zero of my own money on the line. I just paid a one-time evaluation fee to take a trading test. That's it. Because everyone's been asking us, how do I get crypto loans? Or how do you leverage trade without risking any of your own capital? Well, that's exactly why we're leveraging Breakout, which is a crypto prop trading firm recently acquired by Kraken with over 10 million clients, 2.5 million funded accounts, and over $1.5 billion in revenue in 2024 alone. They will fund you up to $200,000 after passing one simple trading test, and you get to keep up to 90% of the profit, and you can withdraw in USDC 24/7 after passing the trading test through the link in the description of this video. Now, here's the problem that I've seen most people face. Let's say you're trading with $10,000 of your own money. That's your rent, that's your groceries, that's an emergency fund, and one bad trade or black swan event and poof, your account is completely blown. Rent's late, savings is wiped, and your family is stressed out. So you're not trading to win. Trading your own money is trading for survival, whereas trading with 100K of risk-free capital is freedom. In fact, if you only have $10,000, you should never be trading with all of that. Instead, if you took just 10%, which is $1,000, and you buy the 100K or the 200K breakout test, and you pass the test, well, you're going to be trading with 6 figures without depositing or risking any of your own money. This is what I'm doing right now. And if you fail the test, you only lose $1,000 instead of your $10,000 because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple $1,000 trading test. And the best part is there's no limit on retries. So that $1,000 can give you 10 shots at a 100K account if you fail the first few. That's 10x better risk management. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. That's OPM, other people's money. You pass the test, you trade Kraken's money, and you get to keep up to 90% of the profits. And you can withdraw USDC on demand 24/7. So I paid, I passed, and now I'm trading 100K, and it only cost me $1,000 rather than risking $100,000 of my own money. And now it's your turn. So do not buy the small test. You're here to scale your portfolio fast. So here's exactly what you need to do right now. I left a link in the description of this video, and when you click it and select the classic one-step 100K or 200K account test, you simply click start trading, and then you enter in the affiliate code 777 on your checkout to get the maximum discount on your 100K or 200K funded account, and make sure to check the add-on box for the 90% profit split. It's only $100 extra. It pays for itself in your first payout. And if you skip it, you're leaving 10% on the table forever. So it's well worth it. Then you simply pay for the test, you pass it, you have an unlimited time frame, and you get to keep up to 90% of the profits. And again, you can withdraw in USDC anytime that you want after you pass the test. That's it. Now, we do earn a small commission when you use our code 777, but it supports value-based videos like this, and it'll help you get the maximum discount on your 100K or 200K funded account test. So click the link in the description right now, take the test, and let's get you funded.